it's August 4th, 2015. Welcome.
Well, thank you, sir. Pleasure.
We viewed a Delmar budget meeting last Friday.
Yes.
They had, I think that was their initial budget meeting, and they're going to have several of them. But prior to that, we got the agenda, and there were some items on that agenda that I found interesting. First of all, the audit fee. Historically, that's been averaging slightly less than $45,000 per year. Well, in fact, in 2015, it is $43,557. The projection for 2016 is $310,000. That's a sevenfold, better than a sevenfold increase.
That's right.
Now, there was an explanation for that increase when they were asked about it. I think Dr. Watts raised the question.
Yeah.
But the explanation was a bit vague for me.
You reckon?
It just didn't really tell me what was going on. So I am filing a Public Information Act request for the letter that the CPA has issued with the breakdown between, they said it's going to be both audit fee and contracted internal audit services.
Okay.
So they didn't seem to have the components of that. I want to know the components because the historic fee has been less than $45,000 for an audit. In 2008, they had a budget amount for an internal auditor of less than $70,000. Now, that I suspect is why they didn't have a good, strong internal auditor, because you want somebody with a CPA,
Right.
you want somebody with Big Four accounting experience, and in this instance, you'd want somebody that is a certified fraud examiner as well.
Right.
Well, that $70,000 budget in 2008 would cover about a third of the year for that guy.
Okay.
So I think that's a $200,000 a year guy. So they've not been able to fill the position. And the CFO was explaining that they tried and not been able to fill it. My concern is that the CFO seemed to be the one that was trying to fill the position. The internal auditor has to report directly to the board.
Right.
Otherwise, he's ineffective. So if he's reporting to the CFO, he's really not going to examine everything the CFO's been doing.
I see.
And that is my concern. Now, the CFO said that there's a breakdown between audit fees and contracted internal audit services. So we're going to get the letters and see what that breakdown is. It would be called an engagement letter, and it's a formal proposal to the college. So I'm going to ask for that. We'll see if we get it. I say we're going to get it. We're going to ask for it. And under our rights under the Public Information Act. But that increase from less than $45,000 to $310,000, that's disturbing.
Yeah. I mean, I'm no accountant, but I don't understand that one.
Yeah. And they've had a position called internal auditor for a number of years. I went back to the annual report in 2008 where it was not filled. It was an empty position. So ever since 2008 till now, it's not been filled. And we've discussed in the past the lack of qualifications of the accounting and the finance staff over there. And when I say lack of qualifications, I mean they're academically not qualified for those positions. And particularly the CFO, who doesn't appear to have ever had an accounting course. Now, what do you get when you have somebody running a $80, $90 million budget with no accounting background?
Disaster.
Well, let's go over what they've gotten so far. And we'll just trace it back to the year 2010. If you'll recall, we found evidence of an accounting conversion in 2010. And the only way we found that evidence was through several PIAs. And the initial one was, you had originally filed for the bad debt. You went to see all the bad debt, and they were gracious enough to provide you with a 5-foot stack of documents. in that 5-foot stack, we found 3 documents that said, basically, third-party accounts receivable written off as uncollectible,
Right.
$185,000.
Mhm.
Seemed odd to us, to both of us.
Yeah.
So I sent a PIA request in for 7 general ledger account details for a 10-year period.
Mhm.
It takes about 20 minutes to run that on any normal system, any normal accounting system. Well, Delmar estimated it would take a little bit longer than the 20 minutes.
Yeah, like 120 man years.
That was approximately what it was,
Mhm.
and $26.7 million. So when we got that letter, my inclination was they didn't want me to have that information.
Oh, I wonder why.
So, in pursuit of that information, after some help from outside people, including Channel 6,
Mhm.
we were able to get all those documents, less than 200 pages, for a total price of 0.
Right.
And then it led us on to the next question, because we have to go through a series of, it's like starting at one point and working your way back. So we started to audited financials and worked our way back. Well, eventually we got back to a point that I said in a PIA that I wanted to see all the sub-ledger transactions for these specific accounts. That's where the memo came up from the college controller to Tammy McDonald, the executive vice president of something.
Yeah.
And it said, gosh, there was no sub-ledger for those accounts.
Mhm.
In fact, it basically said that our sub-ledger didn't agree to the general ledger by $185,000, coincidentally.
Yeah.
So, we've got a sub-ledger that doesn't balance, a memo from the college controller saying it didn't balance, and we have no internal auditor. See, that's your definition of lack of internal control system.
Right.
That is absolutely textbook.
Right.
So, without the proper academically qualified people running the finance department and the checks and balances of an internal auditor, we have the prospect of having a disaster without anybody really knowing about it.
Mhm.
And, you know, it may or may not be a disaster. It's one of the worst sets of accounts receivable systems I've ever seen, and I've seen some pretty bad ones. But this one's really bad. But let me show you what else concerns me, and it is related to the lack of academic qualifications of the staff over there. In a not-for-profit, your revenue needs to equal your expenses.
Mhm.
That way, you're not overtaxing or undertaxing the taxpayers.
Right.
So every year, it should be really close,
Mhm.
really close. So let's look at what Delmar's done. And I just went back to 2010 because that was the year of the accounting conversion, and that seemed to be
And these are public documents that you got.
actually they're the Delmar documents.
Yeah.
So they're their audited financial statements.
Okay. But I mean, they're online.
They are.
Okay.
They are. They publish these. And this is management's discussion and analysis. That's part of the financial statements. The financial statements are audited. The discussion, management's discussion and analysis, the CPAs have to review this pretty thoroughly.
Mhm.
So the chances are these numbers are real.
Okay.
They've been audited. The underlying numbers certainly have been audited. So 2010, that was the year of the conversion. And in the management discussion and analysis, page number 20 of the financial report issued by the college, it says, at the end of the current fiscal year, total college revenue exceeded total college expenses by $6.1 million. It's 2010. So, okay, let's see.
So that would be roughly 6-7%.
You know, it's going to be more than 6%. Yeah, it's
Okay.
more than 6%. So we missed it by 6%, a little better than 6%. Okay, now I did not pull the 2011, but I've got reference to it elsewhere. And 2011 seems to have missed by about $5 million. The expenses were $5 million less than the revenue. So we've got, in 2010, it's just slightly more than $6 million. In 2011, it's about $5 million. In 2012, okay, this is page 20 again, management's discussion on analysis for the year to end at 2012. At the end of the current fiscal year, total college revenue exceeded total expenses by $12.9 million. Okay, so we've got 5 plus 6 plus about 13.
Okay.
5 and 6 would be 11,
Yeah.
13,
24.
$24 million in a 3-year period. Well, let's see what happened after that. So we go to 13. Okay, so 13, they've changed the wording up here a little bit, but on page 30 of the management discussion analysis, I get a chart, and you can tie that chart back to these numbers that were in the prior years. So, increase in net position, that is effectively the total revenues minus the total expenses. The increase in the net position for 2013 is slightly more than 11 million.
So we're up 35.
35 million in 4 years.
Oh, man.
Revenue, less expenses, surplus $35 million.
That's the third 1 year's budget.
Well, it's a third of 1 year's budget, but we haven't spent the budgeted amount.
Oh,
So, you know, the real expenditures are quite a bit lower than the budget,
yeah.
apparently.
Well, does that mean that by the 10th year, we don't need to fund
I
more
get-
college?
I guess we get every 10th year is free. So, that's a bit concerning.
Yeah.
That's 2013. And then if we go to 2014 on page 30, again of the audited financial statements, management's discussion and analysis, increase in net position, $10,427,000. Total revenues, $105 million. Total expenses, $95 million.
Well, are they rolling that over? And I'd have to be an accountant.
It's every year, you have to add it together.
Yeah,
It's every year. So in that 5-year period, they missed
45.
$45 million.
Yeah.
More revenue than expenses, $45 million in a 5-year period.
And that's half the budget year.
It
The
sure
90.
is.
Yeah. So I guess the 10th, we get the 10th year free?
Well, except for the restrictions placed on this, on this surplus, that, and I've tried to find the definition for the restrictions, and I haven't found it yet, but the way I understand it is, surpluses can't be used for operating expenses. So here we've generated what appears to be, based on their audited financial statements, $45 million of excess revenue over expenses in a 5-year period that cannot be used, the way I understand it, it can't be used for operating expenses in future years.
Well, who can we write to find out?
Well, we're looking on the statutes. We will find it.
Okay.
We will find it. But as a taxpayer, that tells me, just on the surface, that we've been charged taxes that probably didn't need to be paid. $45 million in 5 years?
Mm-hmm.
And it's funded by several sources, but one of the main sources is our property tax.
Yeah.
So we've got $45 million that had been built up over a 5-year period of surplus revenue in excess of expenses. Now, why do I correlate that to the lack of academic qualifications? Well, those are sizable percentages.
Yeah.
If the goal of the institution is to have expenses equal revenue, we haven't even come close.
Well, that's what it's supposed to be.
We have not even come close. And surplus is not a good thing in a taxpayer supported entity.
So is that why they go out and buy $6-7 million worth of acreage? And
Coincidentally, that's what some of the funds were used for.
I remember that, it was 6.8 million, I think.
I know you can use it for capital improvements, certain things, capital improvements is one of them. But we're building up this huge surplus.
Mhm.
And at the board seminar last Friday, they proposed an increase in the taxes.
Yeah, I remember that.
Now, help me to understand why we charge the taxpayers, and it doesn't matter if it's just the local taxpayers, the state taxpayers, or the federal.
Right.
I believe we qualify as all of the above.
I think so, yeah.
So,
Last time I checked.
so we, the taxpayers, have plowed in $45,000 in a 5-year period, $45 million
Right.
in a 5-year period, more than they've spent. And that's not, there is no way you can say, well, they've saved a lot of expenses. No, they've missed their budget. They haven't even come close on their budget. And
Well, that explains the Delmar math that I've seen in the past. And one of them, I'll go back to that estimate of cost for the general ledger information. When we were told by the PR person over there that was a mathematical error.
actually, she said that on camera several times.
Yeah.
So,
So, yeah, I think zero, which it cost in the end, versus $26.7 million, that's quite a...
that's not even a rounding error, is it?
No. Oh, my gosh. Yeah,
Honestly, I'm astounded. I'm astounded. And when they were talking about the surplus, and they talked about the surplus for this year, which we haven't included in here because it's not been published, because the year's not over yet.
mhm.
They anticipate 7.2 million, I believe, this year in surplus. So we're at 45 plus a 7 is $52 million in a 6-year period.
Well, I don't know what to conclude from that. I guess what I'm gonna have to do is go back and get that certification too. I don't think you-
Certified fraud examiner?
Yeah, I don't think you, do you have to be a CPA?
No, you don't. You just have to have some common sense. I think you qualify.
Well, thank you. I hope so. That is astounding.
Take you about 3 hours to pass it.
And then, now they've got the bad debt again for the same amount, $350,000. Is that just a wild guess, or? Because it was what, 190 this past year?
Well, you know,
We don't know.
I got, based on all the information I've gotten on bad debt, and it was $2.838 million that was written off in a 7-year period.
Yeah.
I don't know how they calculate that. And I've heard it explained by the CFO. It's sort of like a circular explanation, though.
Yeah.
He'll start at one point, and then when he's done, I'm
Right.
thinking, what in the world did he just say?
Mhm.
Because I've dealt with bad debt for decades,
Right.
and I think I don't understand it the same way he does.
Well, you know, I mean, you're not a agricultural educator,
No, yeah, I'm not. No.
but that answers that question. Now, another thing that I'm looking at are the legal fees, and I know we've both been upset about that. In fact, I won't get into the college suing the Attorney General about an opinion they did with one of my Public Information Act requests. They withheld some information that I needed to defend myself against accusations at Delmar College. So I know how much they cost, and then when we do ask for the billings and the itemized billings from the attorneys, a lot of times they say, no, you can't have that, that's attorney-client privilege. So, I think there was an ad that came out within the last 2 months where Delmar wants to hire what used to be called an in-house counsel, okay? To answer directly to the president, and I think the board, all of the above. I don't know if Mr. Rivera is gonna be, if they're gonna squeeze him out.
No, they would not. He's still gonna be the outside counsel. And trust me, no matter what you think of Augie, they need him.
Okay. But legal fees, it was 325. I'd like to see the actual amount from 2015 when this year is over. And then they dropped it down to 175,000 for 2016. But what I'm just wondering if that 175 is going to be for outside attorneys, and then they're going to stick another 150, 200,000.
That salary will be put somewhere else in the budget.
Okay.
And, there may be some things that are winding down that we've seen a lot of invoices referencing. Now, they still waste all our dollars when they send those PIAs up to the outside counsel.
Yeah.
And then they send it to the AG, and the AG says, no, it really needs to be released.
Yeah.
Which has happened almost 100% of the time.
Yeah.
So, at a cost of thousands of dollars.
Right.
But one of the references that we've consistently seen over the last 2 years in the attorney's invoices, they're references to the Board of Nursing.
Mm-hmm.
And those are lots of dollars, tens of thousands of dollars that the college has spent. And it may be that that's coming to fruition.
Mm-hmm. So
that may reduce their outside counsel fee. That's just speculation on my part. But, the 175, if that's all they spend, which is about $15,000 a month,
mm-hmm.
if they can get their attorney's fees down to that,
Right.
And keep in mind, a lot of the outside fees have been for this 95 acres over here,
Oh, yeah.
out of the Austin office
Mm-hmm.
of the outside counsel for $400+ an hour.
That's right.
And I'm not sure how much more property work needs to be done over here, other than mowing the lawn maybe and moving some of that dirt around.
They can't get in, it's a swamp over there. But it's not a floodplain. All right, see, they've got faculty salaries here, okay, at 23,000,002, and then next year 23,000,005. So you're looking at what, 200,000 increase in faculty salaries. And then you've got the employee related, goes from 13 million, say 14 million, to almost 16 million. So that's an increase of 2 million, 14 to 16, $2 million. Now, I think that at the last meeting also, Regent Dr. Watts mentioned something about administrative bloat.
It appeared he hit a nerve there.
He hit a real nerve over there, and I guess the president came unglued and had some issues with that also. But we've got it documented that that back in the 1980s through the 90s and so forth, it was consistent over 50% of the budget. The budget was for instruction. Now it's down to 36.
And I have seen, that's true. I have seen those summaries of those documents.
Mm-hmm.
I have not obtained the original document,
Right.
which I'm going to do.
Mm-hmm.
So I want to have the document before we post it anywhere.
Right.
But I'm going to do that because that's not available on their webpage.
Well, here's what's happened. That with what they do to try to save money, I'm not sure I understand it mathematically. I didn't take that kind of math with my background. Differential equations doesn't lend itself to accounting very well. But when someone tells me that they're going to give an initiative to faculty members in particular to give them a year's basic salary and have them get out of there and then turn around and hire either adjuncts or less experienced faculty members, that in the long run they save money. But I can't.
Let me comment on that. In the long run, they do reduce costs. The cost reduction is there.
Mhm.
Please notice, since 2010, that we've also lost over 18% of the students.
That's right.
Now, I see a direct correlation between watering down the professors over there
Mhm.
and bringing in less experienced adjuncts, and some of them are fine. I know some good adjuncts, but when I went to school years ago, you tried to get in with the tenured professors.
Oh,
You
yeah.
wanted them to teach. You didn't want to get in with an adjunct.
Mhm.
And I don't think the university had any adjuncts. They may have, not in my,
Right.
not in the business that I was in the business department. But the tenured professors were the ones that you wanted because they had the experience.
Yeah.
Knowledge comes with experience. The reputation comes. Harvard doesn't hire less expensive adjuncts.
No.
Harvard has a good reputation. Their student count doesn't decline. It certainly doesn't decline 18% since
Well, they
2010
probably have to turn away 50% of the
or
applicants.
more.
Yeah.
So we've got what appears to be a program of reducing cost, not saving money, reducing cost. And then we reduce, along with that, a direct correlation. We've got over an 18% decline in enrollment.
Mhm.
While almost every other community college in Texas has an increase in enrollment.
Yeah.
Now, I see a direct correlation there. I don't like that correlation because, for a number of reasons. One, CCISD is in the bottom 25% of the ISDs in Texas.
Mhm.
Two, Corpus Christi is the second most illiterate city in America. What we don't need is a watered down community college. What we need is a strong community college.
Yeah.
And it looks to me like we're going exactly in the wrong direction.
Well, I guess I've just bucked the trend over there. A lot of people leave, they say, I've had enough of this stuff. I think too much of my students to do that.
And that was evident in the Facebook post after your Friday filming on KRIS TV, where you had better than a 99% approval rating on Facebook.
Yeah.
And I've never seen that before.
Well-
Usually there's at least 10% haters out there that'll
Oh, yeah.
chime in.
Yeah, well, I try not to get them into that. I don't let them get away with diddly. But I think in the end, they know I've got their best interest at heart.
They do, because I've gone through hospitals with you and they come up to speak highly of you after they've graduated.
Mhm.
So that tells me a lot.
Well, let me go back to another problem if we've got a couple of minutes.
We do.
Okay, now, when we found the write-off for $54,000+ to Texas A&M University Kingsville, and we asked about that, and it looked like they were going to tell us what was happening and why at first they said they didn't know about it.
That's right, until Andrew took his camera down.
Right. Right. And then everybody clammed up, and I don't know that we ever got a decent explanation from anybody about that.
We didn't get anything.
Okay.
They went silent.
Okay, and then on the Coastal Bend, what is that? Council of Governments, okay. I called those people, and that was a write-off, and this year, there's been more than that since then. It was $89,073, and that's a lot of money. So I asked them, I said, are you a government-sponsored entity? No, we don't get any tax money. We don't tax anybody. Well, all of their revenues come from taxed entities. Okay, that's the Council of Government. So then, I think you followed that up.
I wrote two separate PIAs to them, and they ignored both of them. So I took the second one, and I sent that copy of that to the Attorney General, and I said, I can't find any exclusion for these people that exempts them from the PIA laws.
Right.
And a few months later, the Attorney General sent a letter to them and copied me and said, you're not exempt. You have to furnish this information. Well, gosh, I think they're ignoring the AG just like they ignored me.
Yep.
I'm not sure that's going to work out all that well for them.
All you can do is just keep trying. It's crazy. It's absolute lunacy. Oh, well. But they, you know, and then between the two entities, those were the two biggest ones on this, the original bad
2008.
debt that we found out, yeah.
That was the one that, the college controller said that was coincidentally the out of balance amount between the general ledger and the sub-ledger.
Sure.
And there was no sub-ledger activity because there was no sub-ledger after the conversion. Wow.
That's a new twist for accounting, isn't it?
So, well, I had seen stories like that before, but they all ended up not all that pleasantly for the participants.
Well, I won't speculate on that. I just hope that some of you fine folks out there will pick up the phone and call the Elmore College Regents and say, we want an explanation, particularly since the president of the Board of Regents is what is he, got an MBA, I think.
An MBA in accounting.
Yeah.
MBA with a concentration in accounting. And I know he can read a financial statement. I've watched him.
Yeah.
So he can read a financial statement. How do you read this and ignore it?
I don't know.
We're over $50 million in surplus,
I don't know.
and now they're proposing raising the property tax.
Right, and then they want to go for another bond for $200 million to put in a new campus out here on that 95 acres of swampland out here.
A new campus for the declining enrollment.
Yeah. That makes perfect sense to me.
There's your math. Doctor, we are out of time.
Okay, thank you very much.
Thank you, sir.
You don't have to cut much, huh?